Somewhere down this road, so keep in touch. The boys tough when words you have enough. I wanna find that you I used to know. Whatever happened to the man that she followed?
Welcome. We are back. Another day in the market. Welcome back to the Trading Cave. What's up, Frank? I am Koki, Kaleidoscope, AK in the chat. Everybody rolling in. It's a Monday night. Hopefully everybody had a good start to the week. And we're back looking at charts, talking about what's going on, just some quick updates as we head into tomorrow. Hope everybody had a good weekend. Let's get started. Let's go right into it tonight. No chopping around. Bitcoin. I don't know. You have that one friend that always tells you TA is fake. All you need to do for them is draw this line. Ask them why exactly. What news came out at this exact price point? What fundamental news came out at this price point, which made Bitcoin fall down right there? Ask them that. But yeah, you perfectly tapped this supply line on Bitcoin, rejected it, did get a shooting star candle to close off the day. You still did technically engulf the previous day's candles, so kind of a 50-50 here. You do have the 200-day moving average resistance just above you. And then Ethereum, it looks a little bit different. I'm actually going to extend this out a little bit. Make it like that. It's kind of a bullish wedge. but you did not break out of it yet. Okay, quickly moving into other markets, the US 10-year put in the highest price it has seen since November of 2007. Okay, November of 2007. If we go over to, where is it? The NASDAQ. All right, we're on the monthly time frame right now. We gotta go way back here. November of 2007 was the absolute top before the Great Recession in 2008. So the last time the US 10-year was this high was the complete top of the bull market post-dot-com bubble into the Great Recession / real estate bubble, whatever you want to call it. The last time the US 10-year was here. Something to note. That is something to note. Wanted to mention that. We take a look at the VIX. You're trying to hold this support over here right around 1270-ish. You're starting to bounce up a little bit. If we go over to the 4-hour time frame, you did slightly break out of this wedge pattern right over here. So maybe this potential double bottom taking place on the VIX. These are not bullish variables for the overall markets. Looking at the 10-year that high, the VIX bouncing off this support again. We will see, okay? Just to take a quick look at some other stuff, we have gold, which has now broken out, back tested this wedge pattern, and then also broke above the 200-day moving average yet again, and this 1920 resistance level. If you even want to just look at the bigger picture here, right? Let's forget about all those little patterns. Let's draw one bigger pattern. It's like one massive bullish wedge on gold. So you have the 10-year going up, the VIX going up, gold potentially breaking out and going up. All of these things that people might want to run to in a recession. I'm not saying it is, I'm not saying it's not. Those are things that aren't going up right now. That is a fact, okay? That's a fact. Will we have the scenario where history changes and the past does not repeat itself and these things go up and so does the market? We'll see. But most times when we get these variables, the market starts to correct and then we'll take it from there. And then a final look. I want to look at the Chinese market. We haven't looked at this since I started streaming again. And you can have a wedge pattern, right? This is a bullish wedge. It tried to break out. I was in some Chinese stocks back over here. It didn't really hold above it. And now it's breaking lower. You just flipped this major support from March of this year on the Hang Seng Index. It was also major support in May and June of this year into a resistance. So Chinese stocks potentially heading even lower, believe it or not. I actually want to take a look at BABA, which was on the bearish watch list this week for premium members. And BABA at one point today was down about 2%, which is not horrible for one day. But if we zoom out over here, it just broke down from this pretty large triangle pattern. And then since the beginning of the month, it's already dropped about 10%. So you're starting to see some of these names roll over. Let's talk about US stocks now. Let's head right into the SPY and talk about what is going on here. We have this huge test at 444, right? You had 2 highs over here back in June. Now you have 2 lows over here between the 2 lows this month. This is the equilibrium level of this range, right? This is a much larger range over here, very boring range. What did I say? All right, my first stream back, what did I say about my thoughts on the market for September? I said on my first stream back, it's probably going to get boring. And we have had, I think, the slowest price action of the whole entire year in the past 2 weeks, potentially. At least the most sideways, because it was mainly trending up, trending down. I don't think we've gone this sideways like this. Look at how small these daily candles are. We haven't seen that like almost the whole year. I'm not going to go back and try to make sure I'm right, but for the most part, even if we have, it hasn't happened a lot this year. We are in a very, very tight trading range here. This is, again, the larger trading range, but if we look at the last 2 weeks of price action, right? We have only been going up and down 1% on the S&P 500. We've had days in the past where we double or triple that move in one day. In the past 2 weeks, we've only been going up and down 1%. All right, we haven't really broken under 442.5. We haven't really broken over 449. So that's if you want to just talk levels. But if we're going to be talking patterns, the pattern also looks bearish to me. Okay, I already drew it out on the QQQ. But I'm going to draw it out on the SPY now. You are testing, okay, just testing a breakdown from this triangle. Now, technically, this should be a bullish pennant. You're in an uptrend, but there's a couple things I want to mention here, okay? Let's zoom down here for a second. Friday, we had a pretty rough rejection day. We gapped down. We had a gap and go to the downside. That was some pretty decent volume. To give you an exact number, it was 111 million on the SPY. That was the highest volume since June on the SPY, okay? Now, the last time we saw around the same or actually even higher volume on a red day back in June was right over here. And as you can see, not long term, but at least short term, that was a top before a 2.5% decline. So last time we had a red day with that high amount of volume, over 110 million on the SPY, you did continue lower, okay? On top of that, just to add to this, you also do have hidden bearish divergence on the daily. So the overall thesis around a bearish move down is starting to build. You look at the other markets, you look at the SPY. After I look at the Qs, we're gonna look at some large cap tech stocks. It's starting to build, okay? We have this hidden bearish divergence over here on the QQQ as well. And last week I was talking about the potential for a breakout of this pattern. And I am flip-flopping here a little bit, right? I was talking about the potential for this breakout of this pattern. You didn't really get it. You closed one day above it, and as Trace says, it's not the breakout itself that matters, it's the follow-through price action. Your follow-through price action was going down 2% the next day and closing under that trend line. So let's redraw yet again. Let me draw this a little bit quicker. Again, testing a breakdown from this triangle pattern you've been in on the QQQ since July. So the market is testing breakdowns with hidden bearish divergence on the daily. There was very good selling volume on Friday. Today was kind of a low volume, nothing type of day. It's a setup. It's a bearish setup. All right. Now, if you want to look at one more index, we can look at the Russell 2000. Shout out to Gold Miner who spotted this head and shoulders. I'm going to actually draw it out now because it's fully formed and testing a breakdown. Let's make it red. All right. The Russell 2000 also has this head and shoulders pattern. Not only is it testing a breakdown of this head and shoulders, it's also testing a breakdown of the 200-day moving average. Today was also the lowest close on the Russell 2000 since, I believe, June, if I'm not mistaken. Lowest close, not the lowest price, but the lowest close. Okay, and then if we want to look at just one more for a cherry on top, you've got the ARK ETF, where, you know, it doesn't look as perfect of a head and shoulders to me, but you are clearly getting a definite lower high from this high to this one. And if we're going to be talking about a partial rise, which means in this channel, you're going back and forth between both the lines, right? A partial rise means you only partially rised up. You were not able to go back up to the top. So this partial rise implies a higher chance of breaking down over here, okay? So these are the things that are setting up in the overall markets. Let's take a look at some of the largest names in the market to see how they also stack up right now. Taking a look at Apple first, confirmed hidden bearish divergence on the daily. For right now, it's okay. For right now, it's still holding 173. That's the key level. It was highs from last August. It's been low so far in the past month. It's okay for right now, but if that breaks, you could see selling down to the 200-day moving average at 165. Okay? That's something to note. Let's take a look at Amazon. Nice move after breaking out of this descending broadening wedge. Definitely. But classic bearish divergence forming on the RSI. This was also kind of an abandoned baby type of candle pattern. It's not perfect, but you had a gap up doji type of thing. And then you saw a reversal the next day. Let's keep going. Meta. Hidden bearish divergence. Are you seeing the theme hidden bearish divergence across the market? What does hidden bearish divergence imply? For those who have watched the course, you know this. If you haven't, the link's in the description. It's free to view. It implies a continuation to the downside. We've been seeing a downtrending market since August. Yes, we did get a rally towards the end of August, but overall, we're at lower prices than the beginning of August. Hidden bearish divergence implies that we are overall in the midterm going down, and that should continue. So if we take a look at Meta, it closed with a bearish engulfing candle on Friday, and this is a very classic setup in a lot of names right now. I have this bear flag breakdown on Meta. You retested it today. Another similar name, I'm not sure if it's on my watch list, but I was looking at this one, is Microsoft, which has the same thing, hidden bearish divergence and a bear flag breakdown. So the biggest names moving the indices are also showing literal bearish patterns. That is what is taking place right now. Google, and I've been saying this for weeks now, is at the pattern completion zone of a bearish cipher with bearish divergence on both oscillators. If you want like a mega bearish setup, in my opinion, out of all the large cap names, which are in uptrends, remember, there's still an overall uptrend this year. If you want the one that I think has the most bearish setup, just on a pure chart standpoint, is Google. I mean, that's a massive, massive, massive bearish harmonic. All right, so this is what's really setting up across the board. If you want to take a look into more speculative parts of the market, they're not doing well either. Okay, AMC was down 7% today. This could be perceived as a bear flag setting up over here on AMC, very small pattern, but I mean, we've seen these types of things play out pretty nicely for AMC in the past couple of months. These bear flags keep showing up, and it's like, can it go lower? And it does. So we've been seeing a lot of these. It's like bear flag after bear flag after bear flag. Maybe a new one setting up over here at GameStop as well. Hidden bearish divergence on the daily, and a potential bearish pennant forming over here with a major support at 1580. But if that breaks, GameStop has the potential to do what AMC did. Okay, look at this. It's still been in a horrible trend, but it's still holding that 1580. Look at what AMC did. Let's go back over here. AMC was in a horrible trend, but once it actually broke 35, right, which is kind of GameStop's 1580 in reference, once it broke that, it got ugly. It was already down so much from all-time highs, and then it dropped another 90% in like a month once it broke that major support. So I'm actually going to go ahead and set up an alert down over there, 1548 on GameStop. If that breaks, it could get a little bit scary. And then we're going to look at one more, Fisker. I did get calls on Fisker last week. They're not doing well today. Major reason for why I had a red day today was those calls. And yeah, okay. I would guess in certain ways this can be more speculative compared to many other stocks in the market. Just looking at it for what it is, it's still testing a breakout of this inverse head and shoulders. I did share the swing setup on Friday. It's not starting off that well, but you still have the potential for an inverse head and shoulders. You're still above the 200-day moving average. Okay, the RSI is no longer overbought. It did reset. And the one thing I really want to note here, in the last 2 days, Fisker is on the exact opposite of the S&P 500 in terms of price action and volume. Okay, just hear this slowly for 1 second. Friday, Fisker was green and it had large volume. Friday, SPY was red and it had large volume. Okay, now let's take a look at Fisker today. Today, Fisker was red and it had low volume. Let's take a look at the SPY today. SPY was technically green. It was pretty much flat, but we're going to call it green, and it had low volume. Okay. When the SPY had a large volume selling day, Fisker had a pretty green day. It was up 5%. When the SPY had a low volume green day, Fisker was down 6%. So in the past 2 days, it actually has inverse what the S&P 500 has done. I don't know if it's going to be able to continue that. I think my biggest risk for Fisker, and this pattern playing out, it's not even Fisker, but it's just all the bearish things I just said about the overall market. Historically, Fisker, and I'll be straightforward, historically, Fisker does not do a great job of going up if the market's not going up. Hopefully one day it does. Most stocks could probably be said about most stocks. But if the market goes down, it could definitely ruin this. But it is interesting to note that a large amount of buyers bought Fisker on a red day on Friday, and not a lot of sellers were the reason Fisker was down 6% today. I guess it's just really no buyers stepped up today after what happened on Friday. You got a quick rejection at $7 at the open, and then today you just had a low volume pullback and pullback and pullback, and I did not enjoy watching it. My calls did not enjoy it either. But this is a very key level. 650 has been such an important level. Look how much of a support this was in the past, and then resistance, still above the 200-day moving average, still in an uptrend. If you want to draw out a trend line, you're not even close to breaking any trend lines right over here. So the main concern is the market, and I guess this bearish engulfing candle, which can certainly end uptrends like it did over here back in May. But there is the volume, which is really kind of telling me that typically if you're in a strong uptrend and then you get a decent sized pullback on low volume, that could be a pretty decent time to buy a pullback. Not saying to do so. I don't even know if I'm going to cost average my calls, because you want to be careful with putting too much money into shorter term calls. But I'm hoping that they go back up, and I'm still holding them, so we will see. But yeah, that's pretty much what's going on in the overall markets. We will see what happens. I want to do a quick look at XLE, which was technically slightly green today. It's still showing this major ascending triangle. It hasn't broken out yet. Maybe if the market pulls back here, you continue to develop it. But this is still another one that's heavily on watch. So I just want to do a quick update stream. There's not too much I can squeeze out of this market right now, when technically the S&P 500 was up 0.06% and the QQQ was down 0.04%. But I hope so far, or what I explained on this stream, was helpful. We're going to leave it at that tonight. When we get more movement, there'll be more to talk about, but for right now, it's just a game of patience. Okay? If you are in premium, 9:30 a.m. EST, basically right when the market opens, I will be going live in the Discord voice channel, available to premium members to do some live trading. If you're not, you can see the pin chat. This is the first sale I've done, I believe, since June. It's now September. You can now get 35% off with code CHAMPISBACK. All right, click on the pin chat or go to whop.com/championvibe. When you check out, click add coupon and put CHAMPISBACK, all caps, CHAMPISBACK. And you can get 35% off your subscription to premium. If you do lifetime, that's technically 35% forever, and it's only a one-time payment. So that's going to be available for this week. Maybe I'll extend it 1 week. I don't know yet. But as you all know, when the sales are out, of course, I do promote them a lot, but they only come out every 3 or so months. So if you've been waiting, you see me, I'm streaming again. We're doing the live trading. If you want to join, get 35% off to see what's up. If you're still on the fence, you can no longer do a 1 week free trial. That ended. But I think what I'm going to keep up on the website is a 1 day free trial. If you ever want to just join for a day to see what's in it, to make sure I'm not just selling nothing and there's nothing happening, and you want to make sure there's stuff in there, there's always a 1 day free trial now. So whop.com/championvibe. At least get the 1 day free trial, see if you like it, and if you do, then you can move ahead later on in the week and get the 35% off your subscription and stay for longer than 1 day. So yeah. Let's do some taker requests before I head out. You know what? I wasn't going to. I was going to end the stream, but Joel, you saved it. I see you dropped Amazon, which I already looked at in the chat, but we will look at it again. If anybody does want me to look at it, taker, please feel free to drop it in the chat, and I will take a look. Kaleidoscope says, Champ, there were over $3.5 million in Apple 177.5 puts for October 20th. Are you looking at any longer dated puts in this market? I am not looking at any longer dated puts in this market. Do I think the variables are bearish right now? Yes. But the overall trend for the year is still up, and September is just known for bad seasonality. So I'm not looking for longer term puts. The way that I would probably do it is if we keep getting a bearish trend, when I'm day trading, I'll mainly be looking at puts to day trade instead of calls. So that's probably how I'll do it. I'll just day trade more puts than calls. Because if you're in a bearish market, most days you're going to be selling off, right? So that's probably how I do it. But I don't want to short a pretty mega bullish market. I think this was one of the best years ever so far for the NASDAQ. Probably S&P too. I don't want to short that until we have more confirmation. All right, just a quick look at Amazon again. Broke out of this descending broadening wedge, but it does have classic bearish divergence on the RSI, not on the MACD. So that is something to note. If we're going to go down to lower time frames, there's not a lot here to talk about, but I'd probably look at it like this on the 4 hour. That. So just see which way that kind of moves. Either it gets above 146 or it breaks down from this. Frank says, oh. This one's not doing too well. Let me clear up the chart. So the big level is 55.48. Okay, that has been support since July of 2020. You broke under that, and then you actually not only just broke under it, you tried to get above it for a whole week, and then every single day you topped out at it. It flipped from a support into resistance, and then there was enough of bulls trying to get it back above. They gave up. The sellers took over, and then 2 pretty large red days in a row. So it's a pretty decent breakdown here. Your next support is down at 51.22. However, you do have a gap fill a little bit lower at 50.69. So that little area, I can draw it out for you, make it highlighted. This is the next support for ticker O, right there. All right, and currently futures are flat. Not surprised, it's a very slowish market. And yeah, thank you all for watching the stream. Hit the like button, hit the subscribe button. Links are in the description. I'll see you again tomorrow night. Just to reiterate, if you're not in the Discord, the link is in the description or in the bottom of the screen, discord.gg/freetradingmovement. I did release the stream schedule for this week. Nightly streams, the Trading Cave, Monday, Tuesday, and Wednesday this week at 10 p.m. EST. Not going to be doing it on Thursday. I have to be somewhere. And I don't stream on Fridays because it's the weekend. So Monday, Tuesday, Wednesday of this week at 10 p.m. EST, I will be live. So tomorrow night, 10 p.m. EST, be there, same time as tonight. And then if you're in premium, as always, Tuesday, Wednesday, Thursday, unless I say otherwise, I'm doing live trading in premium. And then as soon as they're over, as soon as live trading is over, immediately the recording goes straight to YouTube publicly for all of you to see exactly what I did to get the education from. You just can't see it in real time. All right. A wise man once said, good night.